I want to spotlight maybe some of the action here in the market, how investors should be navigating all this. We've talked a lot about more and more people moving into that bullish camp here as we trade near record highs, but important to maybe brace for volatility. At least that's the point of view of our next market guest here. Noah Hamman is AdvisorShares investment founder and CEO. He joins us now. Noah, good to be chatting with you. Thanks for taking the time here, man. You point out that, look, some volatility is to be expected here. Stocks don't just go up all the time here. So what are you bracing for? What should investors be bracing for? And how are you looking to play it?
It feels like we're almost bracing for the other shoe to drop, right? I mean, I'm just listening to you guys talk about what's going on with stimulus and a lack really of stimulus, new virus strains. It's shocking really that the market's at all-time highs. So it's definitely one of those things where I don't know really what will be the catalyst. Maybe it's what happens in the Georgia Senate runoffs or just getting into the next year. But it feels like risk management is probably going to be the key in 2021, and that's what we're trying to caution investors to be keep an eye on.
Noah, I should suffice this by saying that I've got a lawnmower outside my window here. So if you hear something, you'll know the joys of working from home. I want to get to your strategy because I think it's interesting. You've talked about recession-proof stocks that are good investments, certainly cannabis one we've talked about a lot, as well as alcohol. But you also say restaurant stocks could see a resurgence. What's your outlook right now as we see the closures play out across the states and their ability, the public companies at least, to really get out of this hole that has been created as a result of the shutdowns?
It's probably still too early at this point, but anything in that category, I think restaurants, hotels, airlines that have really struggled through this pandemic. And I think, too, you have to understand the difference in terms of public markets and your local restaurant, right? That's really probably struggling in this environment, but that's not really reflected in the marketplace. But just restaurants in general, we hope, keeping our fingers crossed, more stimulus, better solution for this virus, that we could start to see a turnaround. But that's probably not coming for a few quarters into next year.
Yeah, no, it's an interesting take on the Vice stocks. I mean, we always talk about those maybe being recession-proof. Of course, Sam Adams, Boston Beer Company, had a good year this year. On the cannabis side, we've had a lot of guests on the show talking about how that's another area, considering the fact that, they were deemed essential in many states here. More states approving the legalization of recreational marijuana this year as well. So talk to me about that growth opportunity and maybe how you would give advice to people who have not been traditionally investing in cannabis now to maybe play in that sector.
Sure, absolutely. Well, just starting with the Vice theme alone, you mentioned Sam Adams more than doubled its share price over the course of this year. That's our top holding in our Vice ETF. And that ETF alone has, I think, outperformed the S&P 500 this year by about 10%. And cannabis in particular has been really interesting because, as you point out, deemed to be open during this pandemic and be able to provide services, especially on the medical side. But there's a real difference that investors, I think, have been struggling with. You've got a lot of Canadian cannabis companies that do get the headlines and are able to list on the regular exchanges in the United States, but they've really struggled this last year and through this year. It's really these U.S. multi-state operators, and so we're talking about the companies like Green Thumb and Intrulive and Cresco Labs. Those are companies that you'll find in the MSOS ETF. It's a U.S.-focused cannabis ETF. That product alone is up 50% this year, and being deemed essential has really helped those companies. They have challenges in other areas as it relates to access to capital and where our federal laws currently stand, but we're already seeing some opportunities in 2021 that we think federal legislation will really kind of pump up those opportunities in that space by giving them better, more effective access to capital so that they can more efficiently run their business. But the U.S. multi-state operators definitely has been the place to be relative to cannabis investing.
How much of that potential, though, when you talk about federal legislation, has already been baked into the price of some of these stocks? I mean, we've talked a lot about how there does seem to be this tide turning in terms of sentiment towards cannabis and the business as a whole, and yet we're still looking at a potentially divided Congress, depending on the outcome of those Senate races in Georgia.
Right. I believe very little. I think most of the growth that you've seen in the U.S. cannabis space has been about profitability and earnings. You have well-run companies that are generating profits in this environment, and we really don't know what's going to happen at a federal level. So you're really relying on what you saw in the November elections for 2020, where you had 5 states come online to approve it. The states are really leading the way. The federal component will, I think, make things even better, but I don't know that I see that priced into the price of cannabis stocks today. The growth opportunity ahead and where they trade at multiples as compared to other space really tells me that it's still a small space. It's still a volatile space. You're starting to get some institutional investors in that space, but we think there's a huge opportunity ahead over the next decade, quite frankly, but certainly over the next few years. But I think it's going to take a little while, and it'll be volatile along the way. You don't want to minimize the risk of investing in that space, which is probably why stock selection, especially in that category, will matter the most.
And Noah, real quick, I mean, it's an impossible question to ask, but I'm going to ask it anyway, and not to put you in a tough spot here, but when we think about timing all this out and looking at volatility, we've heard from some investors, some strategists, Tom Lee, talking about maybe potentially in Q1 seeing that volatility hit here. In your mind, though, what does it look like to you in maybe you talk about the Georgia runoff maybe being a catalyst, but what else do you see here in kind of the froth we've seen play out in 2020?
Well, so it's going back to the cautious theme, right? So we're trying to look for, assets that are more non-correlating, or try to look for managers that are more tactical. We just launched an ETF with a firm called Think Better yesterday. That's a tactical strategy that will get defensive and go to short duration fixed income. And it's all built into the exchange traded fund so that manager can make those changes more tax efficiently. So there's several other products like that in the marketplace today that have a hedged equity component, or even one of our other products, DWUS, which is a U.S. focused, but moves around different sectors and different categories in the United States equity market. Being tactical, I think, is going to be important. And some of your investors will do that on their own. They'll make their own decisions, watching you and making that decision, which I think is important. But if you want to rely on another manager's area of expertise to help you along the way, you want to find, whether it's a mutual fund or an ETF, but an ETF can do it far more tax efficiently. Tactical asset allocation will be key.
Yeah, diversity is certainly key with so much uncertainty, and to your point, expected volatility, at least in Q1. Noah Hamman is founder and CEO of AdvisorShares Investments. It's good to talk to you today.
Thank you.